Hi everyone, hope you're all doing well, and today we're going to talk about Tattoo Chef, and we're going to do a little bit of an update because they did report earnings yesterday, and we'll go through it. I know some of you guys are asking about a gang update. I probably will do that tomorrow for you guys, but yeah, we're going to talk about Tattoo Chef because they did report earnings, and that earnings has shown some really big red flags in the company, and I'm going to share with you them really big red flags that I am seeing with this investment that I am invested in, that I own, and my thoughts going forward with my position in Tattoo Chef, because I believe that fundamentally this company for me has changed. It's not the same company that I believed I was investing in a year ago, and when the fundamentals change with that company, I have to readjust what I'm going to do with that position, and I'm going to share that all with you today. So I'll try to be as neutral as possible, and I will kind of share what I am worried about. Obviously, from when I bought the company, I still think there's still positives with this company, but like I said, it's just not the same. The fundamentals of what I invested in have changed from 12 months ago, and yeah, I'm going to update you with that today. So for me, first of all, there's the financials which are showing some red flags, and there's management team that are showing red flags. So we'll go with the management team to start with. So for me, the management team obviously are really important to your investment. Management will make or break your investment, and when you are investing into these stocks or these companies, management are basically, you're putting your capital for them to manage. You are putting your investment at risk, and the people that are going to decide more than likely if that investment works out is management team. They will be responsible for the day-to-day decisions of that investment and what goes on and what decisions they take to kind of promote the company or expand the product range or anything like that. So you do want to have a strong management team in there. When I previously started investing in Tattoo Chef, I looked at what they had done previously to the last few years, and I thought, okay, they're moving in the right direction. Tattoo Chef brand's moving in the right direction. They've got history in this industry. I think I'm getting a good management team here. But the thing is, there's been 4 key errors with the company. Now for me, I am a long-term investor. I'm looking at this from a 2 to 5 year period, and with me, I know if there's one little thing out there that's a little bit negative, I'm like, okay, that's okay, I'll ignore that, I'll let that one go. But eventually now there's getting to that many negatives that have happened with the management team that you have to kind of question, okay, when's the point where you go, this management team is doing a poor job? When they make 1 mistake, 2 mistake, 3 mistake, 4 mistake, 5, there's got to be a point where you go, the management team are starting to make a lot of errors here, and when do you start going, okay, they need to start doing better? And for me, I look at the management team at Tattoo Chef now, and Sam Galletti, Stephanie, what is going on with the management team? And for me, I look at my investment and the investment they're managing for me in this company, I look and think, I don't think they're doing a good enough job. Like I said, 1 mistake, I can be like, okay, fair enough, especially when you're a new company onto the stock market. But for me, there's a lot of mistakes going on here. So first of all, shares. Obviously, we had the issue a while ago of Sam Galletti gifting shares. Like I said, I could potentially let that go. If everything else was fine, if you're hitting revenue, if you're smashing it, one little thing, okay, it's a bit strange gifting so many shares away, but okay, we'll let that go. Next up, the Cfo leaving. So Chuck left, and obviously it was a planned exit. Seems very strange for CFO just to leave so quickly, but they gave a good reason for it. You think, okay, give a good reason for it, you let it go. That's 2. Next up, earnings delay. 10 minutes before the conference call the other day, we get told that the earnings aren't going to go ahead. Once again, just very poor management. Why are we getting communicated so poorly? Why are we doing that 10 minutes before earnings that, oh, we're not actually going to do them now? You could easily do that at least a day ahead of that. And now my 4th little error with management team is they aren't executing. They are not executing what they said they were going to do. When they kind of set out, okay, this is our plan going forward, you look at the company and you think, if they're delivering financials, really good financial results, and they're beating expectations or blowing it out the water, or even in line with what they were forecasting, you go, okay, fair enough, you're hitting what you said you were going to do, or you're exceeding what you're going to do. But now there's a 4th problem in here. Management aren't executing on what they said they were going to do for us investors. So it's one of those, how many errors do you let go of a management team? I look at this and think there's 4 errors they've done recently, and 2 of the big ones for me have come very recently, which is poor organisation, poor communication, and now not executing on what they said they were going to do, and that has fundamentally changed what I think of this investment as well. So now we're going to go into the financials, which I believe Tattoo Chef is not executing, and we're just going to start off with really basic revenue. So this year I've got all the quarters here, and this is the 2021. So in Q1, okay, we're okay in Q1. It was a pretty strong quarter. We put in 52 million. Now what has started to happen is we've had 2 bad quarters. 2 bad quarters is 6 months of bad earnings. And as well, what happened last night, and is probably not getting the right coverage, I believe, is Q4 as well now suggests we're going to have a very poor Q4. So we're actually going to have a poor Q2, a poor Q3, and more than likely a very bad Q4. Now that is 9 months of the company underperforming where it should be. That's quite a bit. Now, as me, I'm a long-term investor. I invest in the company for a long period of time, not just a couple of months, not a couple of quarters, a long period of time over years. But at what point do you kind of go, okay, we do start to have a problem now? For me, I look at this and go, we're about to have 9 months of bad financials, or financials that aren't good enough, or financials that I invested in and I'm not seeing numbers that I'm happy with. Now, in my point of view, that's quite a long period of time. 9 months of not achieving really good financials or disappointing financials isn't good enough, and that's what I'm starting to see right now. So what's happening is in Q2, we actually did 50 million. Now that was actually supposed to be 58 million. So we actually had a bit of a miss on Q2. In Q3, we did 58 million, the quarter just gone. We are moving in the right direction, but yesterday it was supposed to be 64 million. Once again, we have a miss of where we were supposed to be. And Q4, we were supposed to be talking about 70 plus million. And we are now expecting, from the guidance they have given yesterday, we are probably expecting around 60 million in Q4. So we have now had 3 quarters where the revenue that they're going to do is way below the expectations that we were hoping for. And as well as that, I don't want to compare too much quarter over quarter. I want to do it more over year, but the problem is that when you look over a 12-month period, is you have 52 million, 50 million, 58 million, potentially 60 million. We don't know exactly on Q4, that's the guidance, you never know, they might go out and absolutely smash Q4 yet, but you would think that if they're giving that guidance here, maybe we get 61 million, 62 million, there might be guidance, but still, 61, 62 million, we've only gone up 10 million here, and we're supposed to be talking about 70 million plus. There's not really that much growth over a 12-month period. So when you start thinking, okay, after the end of Q4, we might move a little bit in the right direction, what's going to happen is that when we get to Q1 of 2022, I don't know about you, but I don't know how they're going to jump from 60 million to what we were hoping they were going to do next year. The growth is going to be pretty much flat. So we are not seeing that much, or pretty much any progress quarter over quarter to move slowly in the right direction. And I know we should be comparing year over year, but I'm just saying, at what point do you go, okay, we are not seeing any progress at all? Is it when you get to Q1 and you think, okay, in Q1 we're supposed to be doing 70 plus million and we're going to go 60 million? I can't see where that jump is going to happen. And the big thing as well is that there's also some little hidden numbers on here. So you might know that Tattoo Chef actually bought the New Foods of Mexico factory. Now we know in Q2 that actually contributed 4.5 million to the revenue. Now, judging by the time frame that was acquired, in a full quarter, that actually contributed 9 million to Q3 and 9 million to Q4. So it actually turned out that realistically, if we take the New Foods of Mexico acquisition out of the financials, Tattoo Chef actually in Q2 did 45.5 million, 49 million in Q3, and they are probably going to do 51 million if we take the acquisition revenue out of the numbers. So realistically, now we take the acquisition out and what Tattoo Chef are doing, their actual numbers over quarter are actually 52 million, 45 million, 49 million, 51 million. Now this is where the big problem comes, is that when we take that acquisition out of the numbers, the worrying thing is that in Q1, we did 52 million. If we take the New Foods of Mexico contribution of the acquisition of revenue out, we are potentially going to do 51 million in Q4. So going from Q1 at the start of the year to Q4 at the end of the year, we're actually flat on revenue. We actually have 0% growth. And even like I said, even if we don't, if we let them have the acquisition and let the acquisition contribute the revenue, even now with the New Foods of Mexico, there's only that slow jump here. There's not much growth here. And like I said, if I take what I believe the numbers are of the new foods in Mexico and what that contributes, we actually have this year a 12 months quarter over quarter period where there's no growth. And that's worrying, because when we go into 2022, I cannot see, if we go from 51 million, how we're going to start hitting them numbers of 70 plus million in Q1. There might be some sort of jump, but there's no jump here at the moment. And the worrying thing with this stock at the moment, one of the big things that people are pushing out, and I'm seeing a lot of the people that are really bullish on Tattoo Chef, is that sure, every so often in the conference calls, they keep pulling out some really good, like, oh, we're doing this, we're doing that. They're saying, oh, we've gone from 4,000 stores at the start of the year to now 13,000 stores. We've got SKUs up, our average SKU in every store is up so much. But the problem is they keep telling us that we have these stores going up and SKUs going up, but I'm seeing no proof in the financials. If we are increasing our stores, if we are nearly tripling our stores, our SKUs are going up a huge amount, why are we seeing no progress in the financials? Even if I take the acquisition numbers out, there's hardly much growth going on in the company, and there's no evidence that this is contributing. It's okay saying that, oh, we're doing this and that, but if you keep saying that and there's no proof in the financials, that's the end of the day. You can say what you want, but the problem is that it's not showing. And you would think that if there is this improvement coming in the company, then why is that not showing in the financials? And like I said, when you look at this and you look at the numbers, there's not much growth going on here. And the big thing as well is, like, we have struggled for growth. And we've struggled for growth that much that we have now missed earnings, we've missed revenue, and because we're doing so poorly this year on revenue and growth, profit growth and revenue, the outlook's been cut. We've had an outlook cut in this quarter, so this has been an absolute horrible quarter in the last earnings, because we're losing more money than what we thought we were going to do. We're not growing as quick as what we thought we were going to do, and now we have an outlook cut. And the outlook's cut, and the reason why the outlook's been cut is because we're not growing. We're not growing in the right direction that we should do. And especially for a company that's supposed to be adding all these stores in, it's not showing. And we look at what they're supposed to do next year, and this is personally for me the numbers that I had going into next year. So in my opinion, I had Q1 next year of 75 million, Q2 of 72 million, Q3 of 84 million, and Q4 of 87 million. I look here and I think, there is no way with the numbers that Tattoo Chef are putting in at the moment. I can't see us doing 60 million in Q4 and getting to 75 million. I just can't see them giving that jump. Don't get me wrong, I think New Year, everyone might be a little bit healthy and want to have a better diet and all that, and we might see a jump in Q1. But I mean, what's the jump going to be? 70 million? I mean, we're still going to be way off what we were hoping for. And what I've not even put on this board is that we are missing revenue targets, and as well as that missing revenue targets, the amount of money that we're burning through that we weren't projected to do either isn't good enough. The gross profit isn't good enough, the margins aren't good enough, and okay, as a growth company you can let that go slightly, and if you delivering the revenue growth, then you can go, okay, fair enough, you putting some good revenue growth in, maybe you can manage that a little bit, maybe because there's a lot of pressure on to expand that revenue, we move in the right direction, but even the money they're losing isn't hitting the targets as well. So there's a lot of problems going on here with this stock. And the one big thing I keep hearing people say is that, oh, it's still a good quarter, we still grew 44%. That's what I keep saying, is people keep going, oh, we still grew 44%. But the problem is that we've had a pretty poor year. The outlook has been cut because we are not achieving our revenue, and we've got to remember that 44% is still decent growth. But the problem is that where do you say that management aren't achieving? Where do you start going to the line of, okay, but we're not doing what we should be doing? We this year we had a target of getting towards 58, 59, 60% revenue growth. That was the target this year, but we are now going to put in 44% revenue growth. We are 16% nearly below the growth that we should have. And people go, oh, but 44% is still good. And I agree, it is good growth, but that's not what we got told. That is not what our target was. That is not what we thought we were getting with this company. This company isn't hitting their targets of what they were going to grow. So the problem is that you go 60% is what our target is, and 44% is good, but it's not what it should be. You can say 44% is still good, but at what point do you say it's bad then? So if our target is 60% and we're doing 44, okay, it's still good apparently. Okay, what happens if we do 42%? Is that still good? 40%, 38%, 36%. At what point do you go, oh, it's still good growth, but at what point do you say, but it's not what we bought, it's not what we, management team, said that was achievable? At what point do you say they have not reached their target? So it might look good as a number, but it's not the target, so actually it's not that good growth. And that's what I think people are getting a bit confused, is that 44% growth looks good, but at what point do you go, that's not what we wanted? That's the big tricky point here. And there's a lot of numbers that aren't achieving what they should be achieving with Tattooed Chef. So overall, I've looked at this earnings and I've had a really good think about it. And like I said, there's a few problems that I'm seeing with management. I'm seeing a few problems with financials that aren't achieving the right financial numbers that I thought they would. And obviously when I look at that and I go, okay, it's not achieving the right financial numbers, next year is it going to do it, or are we going to have a knock-on effect? And at what point do you go, okay, you go from a company that looks absolutely amazing, that still looks good, but it isn't what you thought you were getting here. And that's what I'm having at the moment. I'm looking at something where I have a few problems with management, I have a few problems where they're not achieving financial results that I thought they would achieve. And when this company is one of my bigger investments, when do you look at that and go, the fundamentals of this company aren't moving as strong as what you thought they were? And in fact, the fundamentals of the company are probably a little bit weak here. You know, they're not even achieving what management set out to do. And that's the big thing. So for me, I'm looking at Tattooed Chef and I'm seeing some red flags at the moment. They're not achieving what I planned for them to do. And because of that, I'm seeing quite a few problems that I have to justify that risk, where the fundamentals of the company aren't getting stronger, they're getting weaker with this as we go through quarter to quarter. And because now I have to make that adjustment where they aren't achieving what I set out for them to do or what I thought they would do, I have to rebalance that, because if they achieve the financials that I thought they were going to do, then I'm happy. I'm bullish on the company, I'm ultra bullish on where it's going to go. But now I've got to justify that, I've got to change that in my portfolio. So I've looked at what Tattooed Chef has done recently, and I've got to justify what my allocation is with this stock, and because of that I have to take away some of the risk here. The risk is that they are not delivering as good as what we hoped, and management as well are not probably performing as what we want them to. So for me personally, I look at Tattooed Chef now and go, this is probably the right time where I need to take that risk away. So for me personally, I'm looking at Tattooed Chef now and going, I'm not happy with what's going on here. They are not performing what I want them to do, and I'm going to take some of the risk off the table. So what I'm actually going to be doing right now is I'm going to probably sell 25% of my position in Tattooed Chef, mainly because they aren't achieving what I want them to do. And even though I still think there's potential for this company, I've got to manage that risk to reward. And when I look at the risk to reward now, they aren't delivering as much as what I thought they would. So there's a bit of a risk building up a bit more here. So because of that, I need to manage that risk. To manage that risk, I'm going to sell 25% of my position in Tattooed Chef. I will sell that for a profit, not for a loss. Like I said, there's things still moving in the right direction, but just not as good. And because of that, I'm taking that risk off the table. And that's what I'm going to do after this Tattooed Chef earnings, because I didn't think they were as good as what they should be. So yeah, hope you enjoyed the video. Hope there's some useful information out there. And yeah, just a little bit of an update and just kind of what I'm doing with this situation now with a stock that I believe is slightly underperforming where they should be, and what also management told us they would do as well. So yeah, hope you enjoyed the video, and I'll see you on the next one.